Hello, everyone, and welcome to week 6 of SelfWealth Live. My name is Owen Rask, and it's my pleasure to have you with me. As always, it's great to talk investing, to talk about companies, and all different types of things that we love to talk about as investors and as people who are just trying to work out how things work and make money, hopefully. Hopefully we can make some money along the way. So I can see that a few of the usual suspects are already in the chat. So it's great to see you, Plant One, Da Vinci, Adam. Looks like he got in early this week. So if you can hear me, just say g'day, give me a thumbs up or say hello, and then we can dive into it. We're expecting a few people today because we've got some really interesting topics. Today, we are going to be talking about a whole heap of different things. And to be honest, they're probably at opposite ends of the spectrum. So, yeah, wonderful, great. Thank you for saying g'day. I don't even know how to pronounce that username, Evil Day Foo. I'm going to give it a crack. So there we go. I've got Rob with me today. We're going to handle all of your questions. I'll take the investing questions. Rob will be able to direct you to support for SelfWealth. So if you have any questions relating to investing, please put them in the chat. If you have any support questions, the easiest place to get support instantly is to head to selfwealth.com.au, and then you'll see the support widget in the corner. And you can dive into that and speak to one of the team. So if you're chatting, a SelfWealth account, features, that sort of stuff, you can ask questions here, but if you want actual help, just use the support widget. On the topic of questions, if I do answer any questions or we do talk about some stocks today, which we're going to be, just remember that any of the commentary that I provide is limited to general financial advice only. So that means that I'm not, taking into account your situation or your investing goals or your portfolio. I'm just answering them on the topic or the basis of investing in a general way. So we're going to talk about companies. In particular, we're going to talk about a handful of companies, some of the companies that I own in particular today too. I'll try and disclose them as I go through, but I think what we're going to talk about today is actually one of the most exciting, or the two topics that we've got today, which are ethical or ESG focused investing, and also the buy now, pay later space here in Australia and globally, are probably two of the most exciting, themes of the next decade. So super, super interesting. And I obviously have some exposure to these sectors too. So I'll try and disclose which shares I own as we go through. G'day, Najib. Gilly Monster, wonderful. Great that you're a newbie. You're in the right place. For anyone that's completely new to SelfWealth Lives, you can use the hashtag SelfWealth Live, and you can find us on any of the major social media channels. And another thing you can do is you can go back and watch all the previous SelfWealth Lives on the SelfWealth YouTube channel. I find that the best way to keep up to date with content from creators on YouTube is to subscribe, because then you get notified when they're going live or if there's a new video out. So that's one way to do it. Loz is here too. Always a pleasure, Loz. Great to have you with us today. Always a pleasure. Okay, so like I said, today we're going to be talking stocks. My name is Owen Rask. I'm the founder of Rask Australia. I'm an analyst by day. My day job is actually analysing companies for our members and providing that research. I host two podcasts as well here in Australia, the Australian Investors Podcast and the Australian Finance Podcast, which are super popular and people seem to like them. So I'm pretty fortunate that people like to listen to what I have to say. I probably talk too much. Today, I'm going to talk about some really cool new features inside SelfWealth. But just as a reminder, instant deposits, if your bank is OSCO enabled, are now available. So you can deposit some money instantly straight into your SelfWealth account, which I know is heaps of fun for a lot of you that want to get up and running straight away. Live pricing is available for Aussie stocks, which is always good. We're almost at the end of September, and that means that the free trading promo is still up for grabs. So if you place 3 trades in September, you go in the draw to win 100 free trades. So that's a bit of a no-brainer if you're already investing. And finally, SelfWealth, it has been announced, which is probably the best feature of them all, in my opinion, is the ESG scoring inside the SelfWealth platform, which I'm going to explore with you today. I think, this is a huge step for industry and for investors alike, because this is something that I always get questions on. So Adam asks, is there any major banks that don't offer OSCO? That's a good question. I don't know the answers to that, but I know all the banks that I have, and I have 3 of them, offer OSCO. So I think, yeah, it's kind of like they should already be able to offer instant payments. Surely most of the banks do that. Okay, so we're going to dive into the screen in just a second, but before we get to that, yeah, just know that when we talk about this first topic, which is buy now, pay later, is that it's probably been the most talked about sector on these lives, at least in the chats, since we started. And I know there are some very, very strong opinions, and some people will have some information on these companies that I probably don't have. So I want you to share all of your views in the SelfWealth, in the YouTube live chat here. For example, if you have a strong view on Zip, which is a company that we're going to talk about today, put it in the chat. Tell us why you like Zip. If you can tell me now, that would be fantastic. Like, give me the thesis. Like, why do you like Zip? Likewise, if you're interested in the Afterpay plus Square merger, or I should say it's takeover, Square's buying Afterpay, tell me if you like that transaction. If you're going to buy shares in Square, you're going to hold on to your Afterpay shares. Tell me all about that using the chat function. And as we go through the companies, probe me and ask some questions and give me some points of view to consider, because I don't know everything, and today's going to be really collaborative. Okay, so let's dive into it then. Okay, so here we can see the standard screen inside SelfWealth. And for those of you that don't know, I guess there are some big news events that we need to talk about, which we'll get to in just a moment. But to understand those news events, you need to also kind of comprehend what buy now, pay later is and what it is not. So one of the things that people tend to confuse buy now, pay laters with is just payments companies generally. And what there's some subtleties of what goes on behind the scenes. So one of the things that goes on behind the scenes in payments land is that typically in a transaction, you'll find that there are different banks involved in a transaction. So if I send you money, there's typically two banks that are involved. There's the acquiring bank, the bank where kind of like we transact and authorizes that transaction. Then there's the issuing bank, the bank if I used a card or something like that, it's basically the other bank. And then in between we have the interchange, which is like Visa and MasterCard. And if we look at, Visa is a very, I guess, well-known company. If we look at Visa over many, many years, we will see that basically this is the gorilla in the payments ecosystem, and most transactions in the world run on Visa, MasterCard, or even some of the big Asian players. And these organizations effectively facilitate electronic transactions. What buy now, pay later has done is it's basically gone the next step. So it's gone from, let's just make an electronic payment, let's tap our card at the local cafe. It's gone from that to digital straight away. And we know the big popular names here in Australia are Afterpay and Zip. And what basically happens is that when a transaction takes place, it's really just a payment mechanism for consumers. So they still, rely on some of these the payment systems that go on in the background, and they still rely on basically the merchant or the retailer accepting the payment mechanism or Afterpay app, and they still rely on the consumer actually having the app to use it. And so Afterpay, as you know, was massive in physical stores, then it moved online, and it quickly got to 10% of Australian e-commerce. So Afterpay is definitely one of the biggest success stories in Australia's fintech history, and also one of the biggest success stories in technology generally, just given how fast it has grown and how rapidly it has been adopted. And so it's a really interesting business, which we're going to dive into in just a second. It's always faced criticism, whether it's from consumer groups who are worried about people like getting money ahead of time when they can't afford it. It's faced criticism from credit card companies because it's effectively upending that style of payment. So traditionally, in the past, what would happen? In the past, we would effectively pay with our credit card and we would pay interest. Now, with buy now, pay later apps like Afterpay, we can effectively pay for something and pay in 4 equal installments without an interest cost. And that is a huge advantage for most consumers, because what it means is that effectively you can get something like an item from a store, pay for it over time, and there isn't a really onerous interest cost associated with that. And yes, there are certain fees, and in particular, the biggest fee that people don't realize with Afterpay is actually the retailer pays. So the retailer is the one who ends up footing the bill, because they pay about 4%, depending on what type of retailer they are. They might pay 4%. And at the end of the day, Afterpay makes this net margin here. So this net margin is effectively what Afterpay makes. Some people think when they see sales in Afterpay's financials that means that's what Afterpay is making. That's not the case. Afterpay is making, so there's sales, and then there's what Afterpay keeps, which is then revenue. And so that is kind of the key for most people to understand, is what you see in underlying sales is basically what's going through the platform. So I want to kind of emphasize that point just for those of you who are new to this. The other thing to keep in mind is that basically most buy now, pay later platforms are platforms. So in the past, companies like PayPal, which pioneered this space in the late 90s, early 2000s with Elon Musk and Peter Thiel and many of the kind of the Illuminati that have come out of PayPal since and gone on to create great companies, is they discovered early on that you have to create a payments ecosystem from two sides. You can't just have one side of the payment ecosystem, which might be the retailer, and then not the other side. You have to be kind of have that general acceptance from both sides of the network. And Afterpay has done that really well. You can see here 16 million active customers, and they have 100,000 active merchants. So whenever I use the word merchant, I just mean retailer or store kind of thing. That's basically what I mean. So Afterpay made a decision to move into the United States not too long ago. They partnered with the likes of the Kardashians for influence, and that has been huge. And what Afterpay has effectively done is started with prominent high-end retail brands, and then they moved backwards from that. And so this was a very deliberate strategy by Afterpay. What they did was they said, we're going to start with the best brands, and then we're going to charge them less. So we're going to charge those retailers or merchants less to get that big adoption from consumers and to get people downloading the app. And then when the other retailers want to join the Afterpay platform, we'll start charging them more. So every transaction will charge them more. So that's another insight, which is really interesting, because there are a lot of buy now, pay later platforms rapidly emerging now, and many of them target smaller retailers first because they think that they've been neglected, when in fact it's just a deliberate strategy by Zip and others to go straight for the bigger players to get that mass adoption and to build both sides of the platform. So to build the retailer side, but then also build the consumer side where they download the app. For those of you, if anyone has used the Afterpay app and wants to compare it to the Zip app, feel free to drop some comments into the chat. I can see that Craig said, good morning, Owen, from sunny Perth. Great, Craig. It's wonderful to have you all the way from Perth. I know it's a bit earlier where you are, but you did have the AFL Grand Final on the weekend, so I hope that was a bit of fun for you, mate. It is sunny here in Melbourne. I got to tell you today, we are very, very lucky. For a Monday, I've got a full week of rain ahead, so lucky me. Yeah, Stevie, great day to be trading and learning about investing. Yeah, wonderful. If you can keep this screen open while you're doing your thing, that's even better. Okay, so now we know what buy now, pay later is, and we've established that. Most of you will know that already. Let's start talking about kind of the industry at large. So typically when you talk about paying for anything, you basically have a choice at the checkout. So you can choose between, do I pay with Visa or MasterCard? Most of us don't even know the difference, so we just select the one that seems to be right for us. And in fact, most of the time when you put your credit card details in on a website, it automatically knows whether it's Visa or MasterCard based on the numbers that you put in. You don't have to select it anymore. But you also see some other options there. Since the early 2000s, you would have seen PayPal. PayPal partnered with eBay. I own shares in PayPal, full disclosure. And PayPal is basically outside of acquiring companies, so outside of true payments companies, like banks, like actual that facilitate the transactions. In terms of payment gateways, that's what we call them, gateways. Some of the big gateways include PayPal, Adyen, Stripe, these businesses. In terms of gateways, PayPal is basically the juggernaut. It has grown a massive audience of over 300 million users. I think it's over 400 million users now, because people at the checkout see PayPal and they're like, I trust PayPal. PayPal were here when the internet started. Well, that's what they think. And PayPal have lasted this whole time. They're huge. So I'll use PayPal because I trust them. And so PayPal was basically the original beast in this industry, and they still are, to be honest, the gorilla. Every company that we're about to talk about next is smaller than PayPal in almost every way that you look at it. And so here we can see some statistics that PayPal has brought out on the industry. And you can see that this is all to do with buy now, pay later, because PayPal has just launched their Australian version of this. So PayPal, which has always been involved in the gateway functionality. So in the past, if you came to my website, I would charge for a course. I would charge you, and you would select PayPal at the transaction window, and I would be charged, me as the person selling you a course, I would be charged around about 3% of the transaction. So if you spend $100, I would get $100 less my 3%. And that's typically how PayPal built its business, via that payment aggregator, payment gateway type model. But in recent times, in the last 18 months, they've launched a buy now, pay later service here in Australia. And the interesting thing about what they've done is they've made it free for the retailer. So that's different. Because they don't need to monetize the retail like Afterpay does, they've effectively just gone straight in here and offered it for free. So here's PayPal telling us a little bit about the industry. So they've got almost 4 in 5 buy now, pay later enabled online businesses said they had seen an improvement in the customer experience after they've implemented a buy now, pay later service, such as Afterpay, such as Klarna, any of those. 2/3 of buy now, pay later enabled online businesses said they've seen an improvement in customer loyalty. And merchants/retailers offering buy now, pay later reported double-digit growth in terms of both average checkout value and conversion rate. So this is really interesting, because this is basically what Afterpay, PayPal, and all these businesses have built their name on. If you use us, our customers will spend more. Your customers will spend more. Why not pay us 4%? This is Afterpay. Why not pay us 4%? Because you're going to get 10% more sales or 20% more in sales. It makes sense. Everyone wins, except the consumer maybe. But we can forget about them for a moment. So there are some other really interesting statistics here, and I'll throw them over to you in the chat function. So we'll call this the PayPal study, just in here. So that's in the chat now for anyone that wants to look at it too. What was interesting is that in here, and I'm just going to get my numbers up separately because I've got them in my Slack channel here, which I'm using separately. They've said, some of the interesting stats I pulled out here was recent research commissioned by PayPal in here found that almost half of Australians who shop online, about 45%, have used a buy now, pay later service. Here we go. Found that almost half of Australians who shop online have used buy now, pay later, and there's over half of those who have 2 or more buy now, pay later accounts. Now, this is really important, because what we're about to jump into is some more kind of company research. And what this actually tells you is that there's really not a great deal of loyalty at the checkout. There is some, for sure, you might have 1 or 2, but typically you can have more than one. So when you get to the checkout window, you might be inclined to use your Afterpay account, or you could use your Zip account. And so this is a really important, thing to explore, because what that means is that even though we have numbers of certain users in the presentations, we might actually find over time that you might be a customer of Zip and you might be a customer of Afterpay. So let's bring up Zip, and I'm going to tread carefully with Zip because I know many of our people on the call, many of our investors on the call have bought Zip recently, and they've probably seen it fall back from over $10 to where it is today, which is around about $7.16 as I record this. So, it can be quite sensitive for people if you've bought shares recently and you've seen the shares go sideways or even down. But just remember that over the long term, we've talked about this in recent weeks, over the long term, what matters is the business performance. And that eventually leads to more shareholders buying into the company and higher share prices. And so if we just come into the news tab here, I'm on the price sensitive window. One of the things that Zip has done recently, you can get the presentation from here, but I'll just bring it up here separately so we can see more of it. One of the things that Zip has done recently is made an acquisition in India because that market is going to basically explode. And so what we've seen is Zip has taken its fully kind of credit checked model and it wants to grow that abroad, similar to how it did with QuadPay in the past. One of the key distinctions for those of you, I'm surprised no one's pulled me up on this already in the chat, is the way credit checks are done. Zip provides a slightly more robust service, you could probably say, than Afterpay, insofar as it offers credit checks before users start getting money, which for some people is really, really important. And I get why it's very important from a consumer perspective too. The other thing to note is that the payment terms are slightly different with Zip, and the fee structure is slightly different as well. So very similar in terms of you want to break up your payment over time, but it's also a slightly different business model. So what we'll see in time, I think, is ultimately what we'll see is both of these businesses work for consumers and for businesses, but the way they work and the margins they achieve might be different. So just in terms of recent results here, we can see revenue from Zip is up quite significantly, once again, thanks to geographical expansion, continued investment, but also acquisitions that have been made in the past. We can see the number of merchants are up 109% in a year. Again, what's really important here is that merchants accept the payment, because obviously it's up to the merchant, but it's very much a chicken and egg race here. We've got, if you have enough people using Zip, then the retailer will want to accept it. And if the retailer accepts it, then more people will use it. And so we have this kind of flywheel here. And we've definitely seen that play up with both of these companies, definitely more so with Afterpay in recent years, just given the sheer number of users. One of the things to keep in mind is basically how these businesses allocate for losses and allow for that. They have some wonderful charts in their summaries, if I can find one on the fly. So here's basically, here's a quick chart that basically shows you how it works in terms of that flywheel. It's what we in investing call a flywheel, because the more people that use one thing use another. Other people call it a network effect, where more people are using something, therefore it becomes more valuable, therefore it gets bigger and more people use it again, and so on and so forth. To be honest, in my opinion, the only two businesses that have made this work so far in Australia are Afterpay and Zip. You could maybe make the case for Hum, which came out of Flexi Group. And the really important things here is that you understand how the company allocates for losses. So if we can bring this up, we can see here, Zip has put this front and center for us, which is really good. And it says improved loss rates were driven by high returning customer rates and investments in decisioning capability. Before we get to kind of basically who's going to win and what's really important to note, is that I guess the key thing here is that we're watching all of the statements. So we look at the cash flow statement, which I'll get up in just a sec. So here's the income statement. We'll start there, the profit and loss. And so we can see that Zip is growing very, very strongly. It's actually got a very good operating margin, although we do have to take into account these things down the bottom here, things like acquisitions, things like share-based payments. A lot of people kind of miss those. And then we also need to account for any losses that are expected from basically lending money. But the important thing I want to highlight with Zip today is that it does have a lot of cash on its balance sheet. Even though it's made acquisitions, you can see there $330 million of cash. So even though it's not necessarily partnering with someone like Square, it does have firepower. And more recently, management said that effectively they've got enough money in the bank to still make these acquisitions globally and fuel their investment. I'll get to some other companies in just a second. One of the companies that I wanted to circle back to was basically Square, and this is going to kind of join a lot of the dots for you. So apologies if we're moving quite fast today, but there's actually a lot to cover, and I just really haven't been able to fit it all into 60 minutes. But if we come in here, we can see from Square's financials, we can see some really interesting data. So what's happened? Square has made an offer to buy Afterpay for around about 39 billion, I think it is. I wrote about this recently for my website, $39 billion. And basically, the deal brings together both sides of the ecosystem really well. So what we have on one side of the ledger, while this is loads, I'll just bring it down here. So Square, for those of you who don't know, Square is basically the US's equivalent of what Afterpay is to us here in Australia. But what I mean to say is Square has a cash app, something called a cash app. And what that allows you to do is it's kind of like this all-in-one amazing app. It allows you to trade cryptocurrencies, to buy shares, to send payments, to put your pay directly into it, to do all these wonderful things. And it's basically this cash app that has driven Square's performance. However, Square also has another side of its business, which is where it basically services restaurants, small and medium enterprises. If you go into Officeworks here in Australia, for example, you will see a Square reader that you can buy. If you have a business and you're looking to start your business by accepting digital payments, like this right here, we can see this point of sale terminal, and you can also see this little payment Square device. That's where it gets its name from, Square down here. And what Square, the company, has basically made its name on in the seller side of things is basically taking payment from anyone, anytime. So you can, if you are, say like you're a guitarist and you do busking on the weekends, you go down to the shops, when COVID pending, of course, and you go down there and you play the guitar and you're a wonderful artist, and you might make, $100 a day. Well, in the past, people would put their change down for you, and that's how you would collect some sort of income from what it is that you're doing. Square effectively said, here, take this little Square terminal off the shelf and go and start collecting revenue for your business or your side hustle or whatever it is. And basically, Square has attacked the problem that Afterpay has from both sides. So in this situation here, you can see the customer is this gentleman here with this navy colored jacket, and the merchant is on the other side, a florist. The merchant has this point of sale device where she can upload her posies and the different prices for everything. And she's provided this payment gateway. He can have the cash app, which is also owned by Square, and he can effectively tap the reader and it's done. The payment is done. So Square has found a way to service both of these individuals. The one thing that Square really hasn't done as well as people might expect is grow globally. So we've had this gentleman here. In this instance, he might have the cash app in the USA, but the cash app, no one really has it here in Australia. But by bringing Afterpay into the fold, what they're doing is they're effectively saying, bring your millions and millions of users, this gentleman right here, but bring your millions and millions of retailers and merchants as well. And then we'll basically use this connection that we have already in place and we'll fuel our growth. And so this is basically the strategy behind Square. And I bring this up because if we talk about the future of buy now, pay later, my belief is that the future of buy now, pay later is not paying for, an installment, paying with installments and paying one, payment every fortnight or whatever. The future of this industry is actually colliding with traditional payments ecosystems, where if you now have the Cash App from Square and the merchant has their point of sale and little Square terminal, that payment could be instant. So like we were just talking about Osco going instant into the SelfWealth account, the same type of thing happens. And so my belief is that over time, we'll see other smaller buy now, pay laters kind of fizzle away into nothingness. And we'll see the larger buy now, pay laters consolidate the industry and form deals like this. For Afterpay, in my opinion, this is probably one of the best buyers of its business. And it's even better because soon, for SelfWealth users, it's actually pretty straightforward. If you just find the Square stock, even though it's listed on the New York Stock Exchange, you can just buy the shares straight in your account. But what Square's going to do is they've said, okay, we're going to buy Afterpay, this Australian business, but hey, we're going to also list an Australian version of our stock. So anyone with just an ASX trading account can also buy Square stock. So that means investors here in Australia have better access to Square as well. And that means that you will benefit from all of the other parts of Square's business, not just Afterpay's buy now, pay later. You'll also get exposure to the Cash App, which, as you can see here, is growing very quickly. You can see here that the Cash App turned over $546 million of gross profit in a single quarter most recently. And this, on the seller side, this is that merchant side where they have like the tools and whatever, $585 million and growing fast. So Square is a really interesting business. Full disclosure, I don't own shares in Square, but I think it's a really impressive business. It's got a valuation to match the kind of expectations. So if we come in, we'll look at, revenue's obviously going up, but we'll look at the valuation metrics. And here we can see, a PE ratio. We all know that the PE ratio is very flawed. I'll zoom in a bit for you. We can see the PE ratio for Square is around about 593. Maybe a better measure for you to look at is the price to sales ratio. And then we can look at the price to sales ratio over time, which is, where am I looking? I can't see it. It's probably right in front of me. You guys can probably see it. And I'm just sitting here like, what am I talking about? Anyway, so we can see the price to sales ratio of the past 12 months here is 7.6. And what's really interesting, and we've talked about this in recent weeks, is that if Square is growing its business at 94% year over year, what happens is you've got to remember that the price to sales ratio and the way we calculate it will actually fall if the share price doesn't move, because the amount of sales is growing up. So in summary, for this business, I really like Square. I think it's a really interesting business. I think it's really high risk. It was founded by Dorsey, the same person that founded Twitter. And Square is actually a much, much bigger business, and I would say a much, much better business than Twitter, which has really failed to innovate. Square plus Afterpay is actually a formidable opponent to PayPal, which is the stock that I own. And to be honest, as a PayPal shareholder, I am very mindful of what Square and Afterpay will be doing together. That said, I'm probably more mindful of what Apple Pay is doing in the space. Apple Pay, for those of you who don't have an Apple Watch like I do right here, I'm just holding this up to the camera. I can pay with my Apple Watch just like I can with my iPhone instantly, and Apple collects 0.3% of the transaction for every payment that goes through. I'm actually pretty concerned about that too, because at the checkout, I almost always now select Apple and not PayPal, not Afterpay, not Square, not any of that sort of stuff. I go with Apple. So I think there's a big threat there too. Ultimately, there's so people might be asking yourself, no one's put this in the comments section yet, which I'm surprised, but you might be saying, well, hey, Owen, like, where would you invest in this industry? It seems like buy now, pay later is colliding with payments and e-commerce. Companies like Shopify, companies like Amazon, Apple, all of these businesses are kind of going in the same direction. Where would you invest? To be honest, in this type of industry, with what we're seeing play out globally, it's not so, I don't think it's necessarily so much which one am I going to choose out of all the 10 companies, out of a firm, which is a competitor in the USA to Afterpay, a firm, PayPal, Square, Afterpay, Zip, Apple, Adyen. Which one of these companies are you going to buy? To be honest, I think it's more like take a basket approach to this process. So maybe instead of buying one, you kind of spread your eggs across more positions. And at least that's the approach I've taken. I own Apple shares, but I also own PayPal shares. So as a PayPal shareholder, I'm concerned about what Apple's doing. But as an Apple shareholder, I want Apple to win too. So either way, I can kind of win. And to be honest, in the future, I may even be a Square shareholder because I really like the business. And I think the valuation is the only thing that's really holding me back. I may even end up, Adam says diversifying is the way to go. Yeah. So there's actually a really interesting book on this, Adam. And for everyone that's watching right now, if you're trying to pick a winner in an uncertain industry, and I would say buy now, pay later is an uncertain industry, there's a really fantastic book, and it's called The Guerrilla Game. And I talk about this on our investors podcast, on the podcast series that on the one that I host. And what it actually does is it helps you to understand if something is growing, an industry is growing, how do you identify which one is the winner? And then how do you invest accordingly? By the way, just as a side note, for those of you that are looking at my screen and can see the Guerrilla Game book here, you'll notice that this little widget appeared, this H tips thing on the right-hand side. Well, that's actually an add-on called Honey, and that actually helps you find coupon codes and it searches the internet to find you a better deal on whatever website that you're on. And guess what? That's owned by PayPal, because PayPal thought if people are using that, that's another way for us to get people to download the PayPal app. So we'll go and buy Honey. So that's a really interesting one. But anyway, back to the Guerrilla Game. So what it actually does, Seralto. So Craig says, I like Seralto, CRO. I'll have a look at that while we're bringing this up. But what the Guerrilla Game emphasizes is basically that it emphasizes that you shouldn't necessarily try and predict which individual company is going to be the winner at any one in particular moment or second of the day. Take a basket approach, buy a few of them, and then when you figure out who is the winner, so we know that Zip and Afterpay are definitely winning here in Australia, and then you look at, say, Square and PayPal in the United States, then you can think to yourself, okay, now I know that those four companies are the winners. I'll put more money in them. And I think as investors, we have this tendency to think, wouldn't it be nice if I could just pick the next Afterpay? Yeah, it would be, of course, everyone would say that. But wouldn't it be nice if you just had some exposure to it? Like in terms of minimizing your regret, the way I think about it is if you just buy a little bit of all of them, then at least you have some exposure to them. And then you can always figure out what goes on, what you want to do from there. So Sandy asks, is there an ETF for the buy now, pay later basket? Sandy, I'm not sure. I follow the ETF market here in Australia, and I don't think there is one specific for buy now, pay later. I know if you're in the United States, you might be able to find payments companies ETFs, so ETFs that are specific for payments companies. But in reality, we've been through most of them already, Sandy. So we've looked at some of the companies here, and Craig's just brought up this company called Seralto, which I haven't come across, Craig. So if you said it's small but great potential with partnerships with MasterCard and Fresh Supply. Do you have any view on this one? So I don't actually know the business. And Craig, when you say Fresh Supply, do you mean Fresho, or do you mean I don't know what Fresh Supply is, but anyway, it's a smaller company, obviously. So we can see 162 million market cap. That's a lot less than Square makes in profit, gross profit in a quarter. But just in reflection here, if you can tell us, Craig, what you actually like about this company. Let's have a quick look at the news and announcements. John Alphonse says, what's your view on Coinbase? So I'll get that up in just a second. So let's just have a look at this annual report real quick here. we can see that revenue for 2021, 887,000, so it's a very small company, and an $11 million loss. So just in terms of, so SelfWealth is a transaction services business supplying industries, I'll zoom in a bit so we can all see it, with a broad range of B2B payment services, digital trading software, and integration solutions. Our goal is to convert FPOS payments to card payments utilizing the BSP engagement, coupled with our payments collaboration framework. Our competitive advantage: deliver customers end-to-end invoicing integration, rapid onboarding, digital trust, and automated reconciliation. So I don't know a lot about this business, Craig, to be honest with you. All I'd say is that when you have companies like Square growing at 57%, or if you have companies like Afterpay growing at 48%, sometimes you don't need to have a small cap company to get growth. Sometimes you can get that from the companies that are already winning. Because what I've found over time is that sometimes the winners keep on winning. So John asks, and I'm going to transition to our next topic in just a moment, but John asks about Coinbase. And Coinbase is really interesting. For those of you that watch the soccer, they sponsor some of the English Premier League teams. I think they might have had some ads on the TV this week here in Australia. But Coinbase, obviously one of the bigger exchanges and blockchain, I guess, focused companies. It's really, really interesting business. So I would say that, John, and I think this might be what you may be alluding to, is Coinbase and the blockchain technology could actually be a threat longer term, not necessarily Coinbase itself, but basically what you can do on the blockchain could be competition for traditional payments companies. So if we look at, say, either Square or PayPal, both of those businesses allow you to transact in cryptocurrencies. So for example, if you have a Coinbase account and you are an active trader of say Bitcoin, you might also have a PayPal account where you hold some. It's a bit different, but you can hold some of your crypto in there because you think, instead of using Australian dollars, I might go and just pay for my coffee with some of my Bitcoin. And you could do that with the PayPal app, and PayPal will automatically reconcile that into Australian dollars for you. So, I think, just given that Coinbase has IPO'd recently, John, I would say it's a really interesting business, and I think it's got a first mover advantage in the kind of just the crypto space, generally speaking. And I'm really interested to dig into it more. I haven't had a great look at it. I think this might be something that I task one of our analysts at Rask. I might actually task him with it because he's currently going through all of this ecosystem to find out what's actually going on. But you can see here, we've got the metrics. It's only IPO'd recently, so you don't want to let the share price kind of fool you too much. So great. Thank you, everyone that's jumped in here and helped Anna out, because Anna asked, did you say you can buy Square in Australia or Apple? I cannot find the stock codes. And Peter jumped in, Jasmine's Mix jumped in, and just said, basically, it's not available yet. You can't buy Square shares yet because in time, once Square makes the acquisition of Afterpay, you will be able to. That's the plan anyway, if the deal goes through. So it's going to be in time, basically, is the answer. But you can use, just straight up, you can just add US trading to your ASX trading functionality if you use SelfWealth. It's very easy because you can do it all in one interface here. You just got to apply for that US trading account. Okay, so Jasmine says business to consumer is much bigger market than business to business. Yeah, that's a fair point. So and Craig says, fair comment about the growth of SelfWealth. Maybe I am greedy going for exponential growth. Yeah, but you know what, Craig? If you think about it, so back to my point about Square growing so fast, or even PayPal, right? Even look at Apple, the biggest company in the world, it's still growing really, really fast. And 10% growth even per year, or 20% growth per year over 10 years is a massive amount of compounding. So really, really interesting. Yes. So who needs Coinbase when we'll have SelfWealth for crypto trading, Stevie says. Yeah, well, fair point. I'm sure everyone listening at SelfWealth will love you for saying that. So wonderful. James Hall says, hi, Owen. How about a rundown on SelfWealth? Just bought a nice amount of shares, I believe, in you lads. Oh, well, I think Thank you, James. So for those of you that don't know, which is a really interesting thing, and I can't go into too much detail, unfortunately, but SelfWealth, the company that's organizing this collaboration and the platform that we're using right here, is actually listed on the stock exchange. So you can see what SelfWealth up to, you can see what the team are working on, the product roadmap. You can get a lot of insight into the platform that you use every day and what they're working on, which is great. It's a much better thing than some of the other brokers who are have private businesses or are owned by overseas financial conglomerates that you don't really get the disclosure and you can't really see what's going on. So yeah, really interesting. But just in summary on this, guys, what we've basically had is maybe look at the industry as a whole. So some of the companies that we've talked about include Square, which is obviously SQ, the ticker code. You can pop that on your watch list. Why don't we do this right now? I'll jump in here, my stock watch list, my live SelfWealth live watch list, all of the companies that we've got in here. So the first company I'm going to add is Square to my watch list. I'm going to add Afterpay because obviously Square's buying Afterpay. Oops, that's not the right one, this one. Here we go. I'm going to add that, add to watch list. I'm also going to add PayPal because I own PayPal shares. So of course I'd say that. Well, I'm going to add Apple because Apple is bordering on this industry and it's just a really interesting business. I'm going to add Adyen, which is another really interesting business. I don't think we can get that up here though. So Adyen's, no, it's not on here yet. I'm going to add Coinbase because it's a company that I want to research in the future. And I'm going to add Zip because it's an Australian business. And I keep pressing new watch list. Here we go. Just like that. I'm going to add them to my watch list. Just as a reminder, you can add notes. So what's really interesting is if you scroll across here, you can add a note. So I'm adding Zip for its exposure to buy now, pay later. And I just wanted maybe one final caution on companies like Zip and Afterpay. It's just one of those bad debts over time. Yep. Rob's chimed in and said, probably a good time to say we aren't giving personal financial advice. It's all general. That's right. If I answer questions about investing, it's all about investing. It's not about personal finances and your situation. You need to speak to a financial advisor for that. Yeah, cool. Mick said he didn't know that SelfWealth was listed. That's pretty cool. Yeah, annoying. Yeah, that's right, Peter. Yeah, I think it's really annoying that Adyen is listed in Amsterdam. But it's a really interesting business. There's another really cool business over there that's involved in the manufacture of semiconductors. But I know you can get exposure to that one company through the semiconductor ETF that's just come out. Okay, so dream of a day when I can purchase Ethereum via SelfWealth. Great platform, lads. Yeah, wouldn't it be nice to have everything all in one? Okay, so I'm going to talk about some really important things, the things that are important to me, and I think they're growing more important to investors globally, which is basically this idea of ethical or ESG focused investing. And why don't we just bring up a company like Telstra? Good old Telstra. Whenever I was studying investing at university, Telstra or AMP were the two companies that were given as case studies, and they were boring as anything. But I'm going to talk about them because I know there's going to be something here for us to talk about. So if we come down into our SelfWealth account, I'm going to zoom right in here so we can see what we're talking about. Today, it was announced that SelfWealth would introduce an ESG score for investors. Now, I don't want to kind of, I don't want to tell everyone what's important to everyone. I'm not here to say whether you should invest ethically or you shouldn't invest ethically. I'm not here to say if we should all do that or not. Big Chief said, is Telstra a good one to buy now? Big Chief, I don't know. I know you've got all caps on and you're very passionate about this, Big Chief. But for me, it's kind of like, not, it's up to you to decide. So here we go. We're talking about ESG. So what does ESG stand for? It stands for environmental, that's the E, social, that's the S, and governance, that's the G. So Telstra is boring. Need to add some high-risk speckies to add some lockdown excitement in your life. That's right, Stevie. Come on, Telstra's not that much fun. So here we go. Basically what ESG stands for is how does a company treat more than just its shareholders. So how does it treat the environment by consuming products and services like carbon? How does it treat that aspect of it? what, is it a paperless office versus a company that consumes a lot of paper? These are just really simple examples. And then also, so Chanda asks, where do you see the ESG score on the platform? You just go to the stock details page. So if I just zoom out again here, just to make it easy for you. So this is just like a normal, stock analysis page for any of the
companies.
and you scroll down the bottom, and it's on the right-hand side here, but I'm just going to zoom in to make it a bit clearer for us all watching. We'll go right to the bottom again. And you can see here, this is kind of what it looks like. And so here we can see that this is basically the score done for us. And I'm going to get to explaining why this is important, not just for us as individual investors, but as a whole kind of like investment ecosystem. And so the social aspect of this ESG score is basically saying, how does the company treat internal stakeholders like employees? How does it treat the communities around it? And basically, let's talk about that too. And so, some of the companies which would be really interesting to do this analysis on generally is companies that operate in third world countries where access to labor is sometimes close to free insofar and to an extent where it almost becomes a human rights violation, where companies pay so little for employees. And typically what they've done in the past is they don't employ these people themselves. They'll get another company to employ them and they'll pay them basically nothing, which is really scary. In the past, about 5 years ago, I found a company here in Australia, which was a Chinese company that actually had listed here in Australia to add credibility to the business. But what actually was going on underneath the surface was anything but respectable. And so this is the type of business, personally, I'm trying to avoid when I think about ESG factors. And finally, we have governance. So companies in this model are given scores based on things like shareholders, management, and also their corporate social responsibility and their strategy towards disclosure and all of these things. And so, so Mick, this is a great question. So you asked, sorry, Owen, I must have missed something, but where does the ESG score come from? Fantastic question, because this is the question that I asked when I first saw this widget on SelfWealth. I thought, where is this coming from? Because as you can see here, we've got a score overall C+ for Telstra. We've got on the environmental metrics, we've got a B+, we've got an A-, we've got an A for governance, and a D+ for controversies. Now, whenever I see something like this, I'm thinking, well, who's making that judgment? And so this is actually some really interesting stuff. And you can give feedback on the widget down the bottom here. I can say that SelfWealth is looking to bring more information on how these scores are put together, because it can be very, very topical and very kind of controversial. Anyway, so it actually comes from Refinitiv, which is the same company that provides the data for a lot of the other data that's on the website. Not all of it, but a lot of the other data. But you can see here, basically, I won't go into all of it, but I was actually reading this morning, Mick. So if you're interested, I'll pop it in the chat. And I'll just bring this up here, Refinitiv scoring. And I think, to be honest, as you know, I don't work for SelfWealth, but I think this is an absolutely fantastic feature that the team have added, because one thing to know about ESG, right, is people think, and people will try and convince you that by having ethical companies or highly scored ESG companies in your portfolio, that you're giving something up, when that's actually not the case. Almost all of the studies suggest the opposite. By having a focus on sustainability and ESG, the companies tend to perform better as an average. So here we go. Isaac asks, do you foresee ESG as a predominant marker for stock price? So as in like a way to invest better? Not necessarily. I would say, Isaac, that ESG should be one of the things that you use as part of your overall strategy. So not necessarily, if it's got an A+, therefore it's a good stock. Not necessarily. It's not that simple. What I'm going to tell you is there, okay, so Ad Astra brought in, is there going to be a standardized system of ESG ratings? Well, this is a standardized system right here from Refinitiv. And what's actually, I think, is going to happen, personally, what I think, this is just my view, this is not necessarily the view of my companies, Rask or SelfWealth or anyone, is that there's going to be more standards come to the industry. At the moment, most of the current leaders in this industry have different opinions on what should be and shouldn't be scored. But just in a general sense here, we can look at and we can see that Telstra has got an ESG rating of C+, which is satisfactory. Let's go to something like Australian Ethical, which is a fund manager listed on the ASX that invests ethically. Let's see what they get. A B-, which is good. So that's a better score if we're using the old school-based approach. So you can see there. Does anyone want me to put a company in here? If you choose some companies, quickly send me through some companies and we'll run them through and we'll have a look at the ESG scores for those companies. Pick companies that you think might get really high ESG scores or really low ESG scores. That's really interesting. So Mick is continuing on. He says, is ESG limited to a stocks with existing moats or specs as well? HZR says Plant One. Let's have a look at HZR. Hazer Group. It gets no environmental score. So this is one of the things to keep in mind is that please do FMG. FMG. Okay, here we go. Let's go FMG. One of the things to keep in mind is when I was looking at the data, obviously this is a new thing for the industry. So this is really interesting. For those of you who are Fortescue Metals Group investors, gets a C+, which is pretty interesting because in the past, it's had some controversies. There's been some things in the news. But there's also been really good things that Fortescue is trying to do. So it's interesting that it gets a D for controversies, but in terms of an overall rating, it gets a C+. And this social rating is actually really interesting for Fortescue. For those of you who don't know Fortescue, it's a mining company from WA. The A for excellent here under social is really interesting. I know that Fortescue has an enormous focus on things like Indigenous employment in WA. So really, really interesting. Okay, so you guys love it when I talk about Vulcan Energy. Every week you say, check out Vulcan Energy. So we can see it also doesn't have a score. There are actually, according to what I read from Refinitiv, there are only about 600 stocks that have the ratings currently. Square, let's have a quick look at Square, so that we talked about it all day today. Square gets a B, which is pretty good, isn't it? A B is more than a pass. Zip, someone said. Let's have a look at Zip. Zip gets a D. Jeez, that's pretty, that's the worst one so far. So Tesla, someone asked what are the controversies? So we'll just talk about that in just a sec. So Tesla gets a C-, gets more controversies. Remember, this isn't based purely on what happens for the environment. Okay, so the controversy score measures a company's exposure to environmental, social, and governance controversies and negative events reflected in global media. So there you go. So there's heaps here that we can go and explore. Some of you have put in ETFs. Now, I believe, I could be wrong, from what I've done so far, I believe these ratings apply only to the individual companies, so not ETFs or funds just yet. So I hope that makes sense. Okay, so I want to just quickly step back a minute and finish on this note. So I can now turn off my screen share, I believe. Okay. So the thing to keep in mind is that when it comes to ethical investing and socially responsible investing, there are effectively two different ways you can go about it. In my opinion, the easier way is to kind of understand what goes into these ESG scores and use it as a way to avoid companies. And that's what we call negative screening. So you might look at the scores and you might think, oh, maybe that score doesn't agree with me. But I'm going to use that and put it on my watch list, but I'm going to actually make a note that the score doesn't seem too good. I'm just going to avoid that company. The other thing that you can do is use it as a way to find companies. So that's what we call positive screening. Now, you'll notice that in this live session, I've deliberately used the phrase ESG, and I didn't say ethical. About 6 months ago on our Rask Education website, I produced a course called Ethical Investing 101. And basically it teaches you to invest ethically. And when I say it teaches you how to do that, it doesn't teach you how to, like what's ethical and what's not. It actually just teaches you how to think about it and how to find the answers. At the time that I did the course, we didn't have access to this in SelfWealth. So this is huge. This is awesome. To be honest, this is massive. So Kara asks, what happens when there's not enough data? And this is my point, Kara, and I'm glad you asked this question. Is I would say it's on you to determine if that company's business is ethical or sustainable in your opinion. I think the way that I invest, and of course I'm going to say this, I think the way that I invest is sustainable because I invest in companies that I think are going to grow and companies that I think are doing a positive thing for the community and for the environment. Because I'm not going to invest in companies that have products or services that are kind of falling off a cliff. I just don't invest that way. Some people might invest in those value companies, but I don't. And so when a company doesn't have those kind of data points inside SelfWealth, here's some of the things you can do. One, add it to your SelfWealth watch list. Number two, go in and read the annual report and just look at the chairman or CEO's address at the top. See what the company does. Does that company sound like something you want to invest in? If you're going to think, if you wouldn't run that business yourself and feel comfortable with it, don't invest in it. The other thing to keep in mind is that many companies have separate charters, like Commonwealth Bank, for example, has a sustainability report that they issue every single year. And you can read that. It's generally available. It's a PDF. You can download it. Many companies globally now also issue or make commitments in the form of written reports and statements of things like the B Corp, which is basically an all-rounder social responsibility thing. Then companies in there are organisations like the RIAA, the Responsible Investment Association of Australia and Australasia. And basically, what the RIAA does is it basically puts its stamp of approval on fund managers and ETFs. So go and check out the RIAA website too. So if that's interesting. So Sean asks, just as a final thing, is there an ESG ETF? Well, actually, Sean, we've covered this in the past few weeks, but there are many different ethical ETFs. You can just Google ethical ETFs, or you can find some in there. We've got ETFs that focus on the sustainability side, which is more like the clean ETF, CLNE. We've got other ETFs like ETHI, ETHI, or FAIR, FARI, or even the Vanguard Fund, which is VESG, or even insert whoever. There are so many wonderful ETFs coming to the market that have a focus on this, and one of those is E200. There are many different ETFs, DZZF. Even some of the ETFs that you don't think are ethical actually have ethical filters. So there's some from Van Eck, for example. The Vanguard funds actually do a really bad job of explaining their ethical policies to investors, in my opinion, but some of them also have ethical filters. So great question, Sean. All right, whew, what a session, guys. We covered so much ground. We covered the buy now, pay later space and how it's on a collision course with payments and e-commerce. We've talked about ESG scoring using the new ESG tools. I think that's a wonderful addition to SelfWealth. Honestly, I think it's brilliant. And I'm going to update my course that I created to include that feature from SelfWealth to say, go and check it out. So yeah, wonderful session, guys. Ad Astra says, call me cynical, but super funds have ratings too. And depending on which rating system is used, causes the rating to vary. It does. So my superannuation fund, I'm not going to tell you who it is because I'm not going to say a good thing. My superannuation fund is one of the big ones. And I went in and looked at their socially aware service the other day, and I saw all different types of things that I wouldn't normally associate with socially aware. So you can actually, with your super fund, you can go into the portfolio and check what's in there. And you can determine if you think that's ethical. A lot of them are greenwashing. They're saying they're ethical, but they're not. So check their portfolios and make an informed decision. Roaster says, super impressed with the ESG widget. Yeah. Hugh says, fantastic live video, Owen, fantastic. Thank you. Legend. Adam says, legend, see you next week. Wonderful, guys. Thank you so much for your time today. Honestly, I know we've gone a bit over time, so I really appreciate you hanging around. This is probably my favorite one so far. So if you have any topics for next week, drop it into the chat and let us know what you think of the session. Rob and I can add it to next week's topic. Mika says, sorry, I just joined. Is this session recorded? Yes, it is. You can scroll back to the beginning if you're just watching it now, Mika, or Mickey, or you can go right back and you can just go to the SelfWealth YouTube page and watch all of the lives that we've covered over the last few weeks. Thank you all. Thank you, Chandra. See you all next week. I hope you have a wonderful week. And yeah, I mean, invest well, stay safe, and I'll see you all next week. So thanks again for joining, and be sure to share it on SelfWealth Live.